The statement of profit and loss. Panda Sendirian Berhad. Trading of profit and loss account for the month ended 31 October 2020. Sales RM 37,000 ringgit. Cost of gold sold and opening stock we got 0. Purchases we got 23,000 ringgit. And for closing stock we got 0 ringgit. Gross profit RM 14,000 ringgit. Interest revenue 4,000 ringgit. For expenses we got 2, which is stationery and salary expenses. For stationery we got 1,000 and salary expenses we got 5,000. The total of salary and stationery is 6,000. And finally we got net profit, which is 12,000 ringgit.
Panda Sendirian Berhad balance sheet as at 31 October 2020. Fixed asset furniture 15,000, current asset cash and inverter cash 65,000, inverter 17,000, account receivable 10,000, total 107,000. Equity capital is 80,000, drawing is 3,000, retained earning is 12,000, total 89,000. Long-term liability is loan mic, that is 12,000. Current liability is SA payable CAL, that is 6,000. Total is 107,000.
Usefulness, profit and loss. Profit and loss statement refers to a financial statement that summarizes the revenue, costs, and expenses incurred during a specific period, usually quarter or fiscal year. This record provides information about a company's ability or inability to generate profit by increasing revenue, reducing costs, or both. Profit and loss statements are often presented on a cash or accrual basis. The profit and loss statement is one of 3 financial statements that every public company issues on a quarterly and annual basis, along with the balance sheet and the cash flow statement. It is often the most popular and common financial statement in a business plan, as it shows how much profit or loss was generated by a business. This document follows a general form as seen in the example below. It begins with an entry for revenue known as the top line, and it subtracts the cost of doing business, including the cost of goods sold, operating expenses, tax expenses, and interest expenses. The difference known as the bottom line is net income, also referred to as profit or earnings. Usefulness of the balance sheet statement. A balance sheet is a statement showing the amount of assets owned, liabilities owed, and the owner's equity. A balance sheet includes assets on one side and liabilities on the other. For the balance sheet to reflect the true picture, both its liabilities and assets should count assets equal to liability plus equity. Although the balance sheet is invaluable information for investors and analysts, there are several disadvantages. The balance sheet assists in making informed business decisions. It provides an overview of the company's resources, assets, and obligations, liabilities. This information helps management determine available funds for investment, expansion, or working capital needs. For example, if a company has significant cash and liquid assets, it may have the financial capacity to pursue growth opportunities or invest in new projects.